Alright guys, welcome back for another video. Today's video will be a long overdue update to the Bitcoin Trading Journal series. I just recently put on a very large position at Bitcoin, basically around this previous all-time high from the monthly. But it's not just the retest of the previous all-time highs. Some of the price distinctions that are occurring on the lower time frames as price runs down into this level, indicating that buyers are stepping into the market, bidding the market at this area. And, ultimately that's what we want to see. Otherwise, if this is just a line in the chart, if nobody steps in and bids the market at these levels. So I'll go down that. I'll sort of start at the monthly, work my way down to the very lower time frames, give my rationale from the higher to the lower time frames. Now you can see my trading account right here. It's a 312 Bitcoin position. Equity on the account roughly north of 3 million. So again, it's this is the area of interest, or kind of the really big picture basis for looking at this level as an area of significance. Now, of course, if you had asked people up here who maybe have been more bullish on Bitcoin up here, most of them would have told you that the opportunity to buy a retest of the previous all-time high would have been a major opportunity. Well, now the price actually gets there. A lot of these people that were, actually bullish up here on Bitcoin, now the price is retraced, are bearish now, looking for lower prices. That's just typical market psychology, but it doesn't change the opportunity that exists here, right? Just because people no longer perceive it to be an opportunity is actually a good thing, right? It's you generally want to be on the other side of those trades. So now I also marked off this monthly level right here, because you can see price had an active capitulation down into this level, bounced off, and basically operated up into this level right here. But this is your big capitulation candle right here, marked off. We can go here, marking off this capitulation right here that was greater than the COVID 2020 capitulation, and also the previous capitulation from the breakdown at the end of the bear market in 2018, from 6,000 to 3,000. This is Bitcoin denominated real losses over a 14-day period. So again, you can see, and if you were to map out Bitcoin's entire history, you would see that June 2020 was the largest capitulation in Bitcoin's history. So it's very significant. And again, that was capitulating down into the previous all-time high. So now we'll work our way down to the weekly chart. And we've got this right here. So basically, here was one of your liquidations. Basically, this was, everyone wants a reason for liquidations. Well, really, the reason is that there are more sellers than buyers, but really what happened here was the Lunaterra situation went down. And if you guys aren't familiar with that, it's a topic for another video, but basically they market sold 80,000 Bitcoin into a leveraged market, and really started this liquidation cascade. Well, the bottom of that candle right here actually is operating as, price came down again to the all-time high, capitulated down there. This was the final capitulation, marked by the Celsius blow up and all that. Came down here and then came back up into this level. The cause of these price structures is not as important as the price structure themselves, but this is a very characteristic price behavior, right? Come down to some lower level of support, retrace up into this level, come back down, test this area of support. So another distinction worth mentioning is that, you may find some use in also referencing the 7-day chart, as opposed to the weekly chart. And the reason why I say that is because, the weekly chart, the monthly is significant, and the quarterly is significant because those are very distinct points in the market that institutions operate on. But the weekly close is not the same in that regard because, a lot of the CME closes on Friday afternoon, right? Which doesn't pick up on the weekly close on TradingView. So you can. I I don't know how significant Sunday night is for the weekly close from an institutional perspective. And sometimes, everybody's looking at the weekly, um, and they can draw different conclusions than if you were to look at a 7 day. So sometimes just referencing the 7 day can make things obvious that maybe you didn't see before. Um, and this also brings up another topic that I want to mention is that, you know, um, really, I think what people are not realizing as price cascades down into this capitulation level, right, is they're probably feeling a sense of fear, which is understandable considering the magnitude of the sell-off in Bitcoin, which um, is quite dramatic. And that sense of fear is reinforced by a trend-based model, right? People will validate their fear by saying to themselves that, well, the high time frames are, in an extreme downtrend. And, they'll look at the monthly chart and they'll say, well, this is a very clear downtrend. Well, technically it is, but, the motto goes that the trend is your friend until the end of the trend. And that last part is very important, right? It's not your friend after the end of the trend. It's your enemy. And what typically defines the end of strong downtrends is capitulation, right? Every downtrend, every major downtrend tends to gain strength until it ends in capitulation. And we've seen it end in capitulation. And you know, people will say, well, it hasn't capitulated enough. Well, how do you quantify enough, right? What is enough, right? It is to me that just seems like bears being greedy, right? Where bulls can get greedy, bears can look at the largest realized loss in Bitcoin's history from a capitulation perspective, and then say with a straight face that it's not enough. Well, how do you define enough? I mean, it's the largest capitulation ever. So that's there's a little bit of a misunderstanding there. Um, and then following back up into that trend based model, we have RSI building on or divergence on the RSI building on different time frames. You can see that here. Now, it wasn't technically confirmed here because you didn't get a close below this level, which you would need to, and a close below and then a confirmation above to to confirm the divergence. But it brings into question that trend-based model, right? 'Cause in my mind, if you would come down, set in a lower low, confirm the RSI divergence, and then broken above, that would have actually even been more bullish, because I went back in Bitcoin's history and I've never seen. I couldn't find divergence on the weekly. That's how significant it was. But anybody following a trend-based model would have seen a lower low, right? And they would have seen a lower low on price, and that would have validated them to short any move following that up. And really, what would have happened? Again, this is hypothetical, but if that had happened, you would have seen a confirmation of bearish trend in the trend trader's eyes, but really extremely bullish divergence from a historical perspective that you've never seen. We did have uh, bullish divergence confirmed on the 3 day. So this is why different time frames are important. So you can see here that we do have bullish divergence on the 3 day, very significantly so. So you got this area here, and then this low mediated by this low. So you have a technically lower low than this 3 day close right here on Coinbase, and then and this is very important as well. If anybody's trading RSI, you need to wait for confirmation, right? If you're, say, 3 days ago when you have this close and you say, okay, it closed above this level right here, therefore I have divergence. Well, you don't have divergence until it's confirmed, and technically, a confirmation um, There's different ways to find confirmation. Some people use a close above the high like this, in this case, the break above 20,179. That's extremely valid. Some people wait for the close, which will come on the 3-day later today at today's daily close around 6 or 7 o'clock today, Central Time. So now to put this in perspective, if we go back, I couldn't really find, you have to go back very, very far to find an area where you've got that level of divergence. You have to go back all the way to the capitulation from 2018. So you've got this capitulation right here, and then you've got this lowest low on the RSI. So this is the lowest low on the RSI right here, and this is the lowest low on price action, and you get this divergence right here. Now, what's important about this is, also the height of the time frame that this distinction is occurring on, but also the depths that the RSI has gotten to. Right, you when you're playing RSI divergence play, you want to see it operate out of these very extreme areas in the market where price has gotten very extended. You don't want to be playing divergence within the middle, right? You want to see these extreme areas right here, following a capitulation, right? If we go back to this chart right here, that's your capitulation right here that we're looking at. And then you get this RSI on a 3-day, which is very significant. And really, that's the only price distinction in Bitcoin's history on the RSI that is, similar. You also have that RSI divergence to some degree right here on the low from this summer consolidation right here. So you've got, excuse me, let's see if I can make this. Yeah, RSI building divergence. Again, the RSI is pretty low, not as extended as it is here. So, make of that what you will. But we do have that confirmation on the RSI, and that's an indication that these are the types of things that you'd want to see price acting as support, right? So you see price at this level, volume picks up running into this level, this capitulation level right here, and you see the capitulation come in at that previous all-time high, and then you see buyers step in, bid up the market off that level, up into some other price distinction, probably take profits off that initial bid, and then come back down to this level, and then defend their initial entry, right? Maybe pull off the hedges that they put up here, and you can. And these are the type of signatures that you want to see to confirm that buyers are stepping into the market, right? This type of divergence, defense of the retest of these levels. It's all typical characteristic price behavior, what you would expect support to behave like. Again, if you have a support line drawn on your chart, it's just a line on your chart until you see the evidence of price dynamically reacting off it at that level. Again, and that's really what we're looking for. Now, so we saw the 3-day divergence between this level and this level that we just talked about, but there's even further divergence if you go down to a lower time frame. So we saw the 3-day divergence between this level and this level, building off this previous all-time high level right here, and then also you've got divergence on the 12-hour even further. So it's a little bit like Inception. You keep going down to the lower time frames and you see the same thing, and that's really the ideal scenario that you want to be operating in. Is you really want to see all the time frames line up, right? Like sort of like a solar eclipse where all the planets align. That's really, there's a lot of confluence there, and a lot of you know it's just a lot of confidence when you see the high time frames showing you similar situations to the lower time frames. It's just a very high probabilistic scenario to be operating within. And we see the same characteristic here, right? So we see RSI coming down, retesting that all-time high, the level that initially set in the bids back in July, roughly. And we see this RSI, right, divergence. Um, Now, a 12-hour RSI divergence is actually quite rare. We really only saw it once during the COVID crash. So during the March 2020 COVID crash, we didn't even get daily RSI divergence, only on a 12-hour. So it is pretty significant. And you can see here that stochastics are crossing out of the critical zone, kind of turning up in line. Uh, EMAs are a little bit more lagging, but considering the magnitude of this move, just pumping above this level, you probably see the EMAs turn around. You're already starting to see that on the 4 hour right here. But, ideally, you'd already want to be in a position before this pump. So that's just why EMAs, if you trade with EMAs, um, the good thing about them is if you trade an EMA cross, right, you're generally going to be on the right side of the trade until the market turns around. But you know, they don't give you the ideal entries. Just keep you on the right side of the trade, is a general rule of thumb. Now, whenever you see a price distinction like this, let's go back to this level. So this is a classic example of high time frames operating and people focusing on the low time frames, really getting caught up in those high time frame movements. Whenever I mark off a level, I'm going to mark off the this level right here, the base of the consolidation. That will generally act as an area where price operates off. And you could argue that price operated off it a little bit right here, moving back down here, filling a gap back into this level right here before breaking above. And this is a price distinction where price typically will offer at least a reaction. Didn't offer a reaction there, and also the consolidation high didn't offer a reaction there. This is a classic example. If you see this type of pattern, it means that whatever time frame you're looking at, even now in a 4 hour, is a much lower time frame for the what's actually going on in the market right now. So what we're seeing happening in the market is these low time or the high time frames really playing out, right? So this, there's bigger things going on here, right? Marked by this historical significance of this capitulation, what we saw going on in the RSI. We're really in a level where people are really, really capitulating in this market. And what happens when everybody in the market is selling and short with big short positions? Well, the market generally runs the other way. Um, so yeah, it's hard to say where exactly I would take profits. Um, Considering this is a long position, really based on the higher time frames, utilizing some of the lower time frames for an entry. Uh, I'm not. I will hedge this position at certain times. This may be an opportunity to hedge right here, but in general, I'm going to be looking to hedge, as a way to mitigate risk and pull off the hedge on some of the smaller retracements that I get from time to time. But I'm really happy to, have gotten this position, gotten a good entry, and, also with a good entry and a very clearly defined invalidation down here. Of course, I will manage it more dynamically, but I think, you know, in general, I'm in a good position to head into the today's close, the weekly close, also the monthly close, and also we get a new quarter at the end of the month in October, as well as the Ethereum merge coming up in a few days. So a lot of exciting things ahead. Just leave a subscription on the channel if you guys like